Modern infrastructure, it's just getting incredibly complex, isn't it? Managing cities, utilities, transport, it all demands, well, real-time smarts, predictive intelligence.
Absolutely. And today we're doing a deep dive into a company right at that intersection, Ceinsys Tech Ltd.
Right, and what's fascinating here and what we want to unpack for you is this kind of tension.
Exactly. We've got their latest financial results, Q2, and the first half of FY26 showing just explosive growth, really aggressive global moves too.
But then right alongside that,
Yeah.
we have the board meeting outcomes from just the day before those results came out, and they detail a pretty major immediate shakeup at the executive level.
So our mission today is to figure out how this company is posting such stellar results while managing, this big change at the top. Let's start with who they are. Their tagline is powering intelligent infrastructure decisions. And they place themselves at the convergence of four things.
Yeah, it's quite specific. Core engineering, AI, geospatial intelligence, and mobility.
That mix seems key. It really is. They're not just an IT shop, not just standard engineering.
Right.
They're betting the future is in blending all four.
Okay, so let's get into the problem they're actually solving. Why do they exist? The sources suggest typical infrastructure planning is, well, kind of stuck in the past.
That's the core issue. It's slow, it's fragmented, decisions are often made manually.
And that manual approach leads to
Big cost overruns, avoidable risks. Plus, traditional GIS systems, the digital maps, they're often just descriptive. They tell you what is there.
but not what might happen next.
Precisely. And think about all the data flooding in now. Satellites, drones, countless IoT sensors out in the field.
Right, tons of data, but it's underused.
Hugely underleveraged, according to Ceinsys. And that's where they see their opening.
So if everyone has the data, what makes Ceinsys different? What's their edge?
It's not just about collecting data. It's about making it actionable, predictive. They use AI, combined with that geospatial intelligence, to drive, well, smarter and faster decisions, and importantly, at scale.
So they're selling outcomes, not just tech.
Exactly. Engineered outcomes, risk reduction. That's the focus, especially for governments, smart cities, utilities.
And this ties into that term we hear a lot now, the AI-driven digital twin. What does that actually mean for, say, a water utility?
Okay, think of it like a living, breathing 3D model. Not static, but dynamic. It takes in real-time sensor data.
So you can simulate things.
Yes. Instead of just waiting for a pipe to burst, you run simulations on the digital twin. It predicts where and when maintenance is needed before something fails.
Ah, okay. So it's shifting from reactive fixing breaks to proactive intelligence.
That's the goal. And that shift seems to be driving their scale.
Let's talk about that scale. Any specific examples, proof points?
Yeah, the numbers show they're deeply embedded. In energy, they've processed data for over 100,000 miles of electrical networks.
Wow, okay. That's significant.
And in water, which is critical in India, they've designed and implemented solutions for over 35,000 miles of water networks.
35,000 miles.
And for smart cities, mapping and analysis covering over 2.2 million square feet of urban infrastructure. This isn't small-scale stuff.
No, clearly not. They're playing a major role in modernizing infrastructure backbones.
Now, what's interesting is how they frame these financial results. They actually call it consistent results in an inconsistent market.
Okay, what do they mean by that?
They're pointing out that many players are apparently struggling. Slow procurement cycles, maybe funding issues, the funding winter idea.
But Ceinsys is thriving.
That's their claim. They say it's because they deliver essential, proven solutions that clients need regardless of market conditions.
All right, let's see if the numbers back that up. Q2, ending September 30th, 2025. What's the headline?
Revenue from operations hit 1,635 million rupees. That's up 82% year over year.
82% revenue growth. Okay, that's a big jump. What about profitability?
Even better, actually. EBITDA, that's earnings before interest, taxes, depreciation, amortization, it was up 112% year over year, reached 356 million rupees.
112% on EBITDA. That suggests strong operational leverage, right? Things are scaling efficiently.
It certainly looks that way. But the real eye-catcher is net profit, PAT.
Okay, what was that?
Came in at 257 million rupees.
Yeah.
That's a 120% increase compared to the same quarter last year.
Wow. 120% profit growth in what they call an inconsistent market. That's quite something. Is it sustainable, though? Or maybe some one-off deals boosted it?
That's always the question, isn't it?
Okay.
They seem to address this by highlighting their pipeline visibility. It doesn't look like a one-quarter wonder.
How so?
Well, look at the first half figures, H1, FY26. The trend holds. Revenue for the half year was 3,201 million rupees, up 95% year over year.
Okay, so growth actually accelerated slightly over the 6 months compared to just Q2.
Seems like it. And PAT for the half year, 574 million rupees. That's up 143% year over year. The momentum seems real.
And they have visibility going forward.
They emphasize their order book. As of September 30th, it stood at 10,920 million rupees.
10.9 billion rupees.
Okay. Plus, they mention a high visibility pipeline beyond that.
Right.
And they specifically called out 1,150 million rupees in new orders just for project management consulting since April 1st.
So they seem booked up for a while. That does suggest stability.
So we know they're growing fast, profits are soaring. But where exactly is this acceleration coming from? The segment breakdown tells a really interesting story.
Ah, right. The operational highlights. Let's see. Geospatial and engineering services revenue. Okay, up 39% year over year. That's solid growth.
Solid, yes.
Oh.
Respectable. But compare that to the other segment.
Technology solutions revenue. Wow. Up 147% year over year. It hit 839 million rupees in Q2.
That 147% jump, that's the core insight, I think. It really shows their strategic shift is paying off.
The shift from basic engineering services
towards selling those proprietary AI platforms, the digital twin solutions, the data intelligence. That's clearly where the high growth and likely higher margins are.
Makes sense. Moving from labor-intensive services to more scalable software and intelligence.
Exactly. And their whole market approach seems perfectly timed to catch these huge waves of government spending in India.
Right. They mentioned specific initiatives, like the Jal Jeevan mission for rural water.
Yep, and that's been extended to 2028, providing a long runway. Plus the National Geospatial Mission modernizing data infrastructure nationally.
And the big push for renewable energy.
India is targeting 340 gigawatt by 2030. That creates massive demand for smart grid tech, water management linked to energy projects. They're right in the sweet spot.
So they're basically becoming a key tech partner for India's national modernization goals.
It certainly looks that way. But they're not just staying domestic.
No, the international strategy. They mentioned early traction in the Middle East and Africa, MEA.
And this is where that board meeting outcome from November 6th gets really specific.
What was the decision?
The board gave in-principle approval to set up a wholly owned subsidiary, a WOS, in the Kingdom of Saudi Arabia, KSA.
Saudi Arabia. Okay, that's a very specific, very deliberate move.
It is. They're putting in up to 1 crore rupees initially, specifically for information technology services.
So exporting that booming tech solutions model, the one that grew 147% straight into a region that's pouring, well, vast amounts of money into smart cities and huge infrastructure projects right now.
Seems like a very calculated expansion.
Okay, so let's recap. Phenomenal growth, profits soaring, a strategic pivot to higher margin tech solutions that's clearly working, and a major funded international expansion into the Middle East. Everything looks green, right?
You'd think so. All signals pointing up. Which makes the other big news from that same November 6th board meeting even more striking.
Right, the leadership change.
It centers on the CEO. Mr. Prashant Kamat, who is director, whole-time director, and the CEO, also listed as vice chairman and CEO. He resigned.
Resigned from all those posts. Effective when?
Effective December 31st, 2025. The reason given in his letter was personal commitments.
Okay, personal commitments. The board acknowledged his contributions.
Yes. Placed on record their deep appreciation. Standard practice, of course.
Right.
But the timing is, well, it's notable. A CEO departing right when the company announces record growth.
It naturally raises questions about continuity, stability, doesn't it?
Absolutely. But the board seems to have moved very quickly to address that. Also in the same announcement, they outlined a succession plan immediately.
And that involves Mr. Suresh Kunathayo Poyle.
Yes. Now, the details here are important. We need to read the filing carefully. Mr. Poyle resigned only from his position as whole-time director, effective immediately, November 6th.
Only from whole-time director, so he's still involved.
Vertically, yes. He continues as a director, non-executive, on the main board. And he also keeps his job as CEO of their U.S. subsidiary, Technology Associates, Inc.
Okay. But the key piece of information was?
The board identified him specifically as the CEO designate of the company.
CEO designate. That's quite specific language, isn't it? Not just interim or acting.
Exactly. It signals a planned handover, a managed transition. It strongly suggests they're not starting an external search. They've picked their internal successor.
And one who's already running the U.S. operations and sits on the board.
Right. So they didn't just accept the resignation. In the very same breath, they named the incoming leader. It takes a lot of the uncertainty out of the situation.
So putting it all together, the operational health is fantastic, growth is accelerating, strategy seems sound, but the C-suite is in flux.
But it's a managed flux. The transition points towards internal continuity with Mr. Poyle, who seems well-positioned, given his U.S. experience, to guide this international push, like into KSA.
It almost feels like they're trying to apply engineering principles to the leadership change itself. Planned, managed, stable transition.
That's an interesting way to put it. It suggests they're actively managing this potential disruption. Hashtag outro.
Well, this has been a really insightful deep dive into Ceinsys Tech. So for you, the listener, the key takeaways are, this is a tech company expanding rapidly, really capitalizing on AI and geospatial data for huge infrastructure projects, especially in India.
And they're making strategic moves internationally. That new Saudi subsidiary is a big one, aiming for that high-margin tech solutions growth. But all this success is happening right alongside a major leadership change at the CEO level.
A change that seems carefully managed, though, with the naming of an internal CEO designate.
Right. Now, their whole business model, their value proposition, it's built on creating intelligent infrastructure, using things like digital twins to predict outcomes and engineer stability in the physical world.
Utilities, cities, networks.
Exactly. So given the incredible growth, the strategic direction, but also this very public executive pivot, maybe the core question for the next 6 months is this. Can a company whose expertise lies in predicting and engineering physical stability apply that same kind of precision and stability to its most critical, maybe most unpredictable asset, its own executive leadership structure? Can they successfully execute this global strategy through the transition?
Proving they can engineer stability internally, not just externally. That's the challenge now.
That really seems to be the crux of it moving forward.